Hello and welcome to another episode of the Real Estate Investing Club. I'm your host, Gabe Peterson, and this is the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items for you. First, if you like this episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running far into the future. Second, if you're a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, I've created an ebook just for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All I charge is our admin costs to keep this show running. So if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says get the ebook in the upper right-hand corner to grab yourself a copy. With that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right. Welcome back to another episode of the Real Estate Investing Club. Today we have with us James Garner. James is the first vice president of investments at Marcus & Millichap. He specializes in the investment sale of triple net leased assets nationwide and prides himself in being a valuable asset to owners throughout their hold period. While triple net leased assets are some of the most passive real estate options to invest in, the misconception is that you should just set them and forget them. James is here to dispel that myth. So I'm super excited to have James on the show. Marcus & Millichap is, it's a very widely it's a widely known name. Great to have you guys here. And also just to talk about triple net lease. I've never bought one, don't know much about them. So James, stoked to have you here. Thank you for hopping on the show.
Absolutely. Thanks, Gabe, for having me.
For sure. All right. So I told you before we got on here, we always start with stories. And so why don't you take us back to yours? Where'd you get started? How'd you get started in real estate?
Yeah, definitely. So I grew up in Orlando, Florida. And I've always had an entrepreneur's mind. I'm kind of a serial entrepreneur since I think, I was selling orange juice from my parents' fridge on the sidewalk and candy from my grandma's house at, kids at school. And
they better have got a cut of that.
What was that?
They better have got a cut of that.
Well, I make a joke because it was like my highest profit margin business I've ever started because my cost of goods was nothing. So
if only we could do that in adulthood, right?
Right. I think even the first business I started that had any structure was, I don't know if you remember Pogs.
Oh yeah. Wow. Bringing it back.
Cardboard milk caps. Yeah. It was called Pogs Go Crazy. And my cousin and I would basically make our own and sell them to kids at school. So I've always been kind of looking for some opportunities. And the more I learned about the world, the more I realized real estate has a ton of opportunity. And that's what kind of attracted me to it. So I got my license in 2007 and I sold timeshare for a summer, which made me realize that, transactional sales is not for me. It was a great sales experience, but man, you start every day from the beginning because you just don't have a long-term relationship with anyone you sell to. So after school, I got a job in New York. It was a salaried position, but it kind of introduced me to the commercial real estate realm. And I was selling door hardware and new construction projects going up in the city.
Oh, wow.
And great experience. Loved to be in the city for a little bit, but I learned a lot about myself and realized that, I'd really prefer to take big risk for big reward and bet on myself than to have the stability of a good job. So I made a jump. Moved back to Florida, jumped into commercial real estate with Marcus & Millichap. And that was back in 2013. The business has a ton of barriers to entry, very long sales cycles, obviously the level of expertise that's needed. So it was definitely a grind early on, building your business, learning the business, building relationships. But it pays dividends at the end. I love what I do now and wouldn't do anything different. So.
Awesome, man. I love it. And it's cool. You started with orange juice. It always starts with something small, and you build from there. Went from orange juice to construction, now to commercial real estate. So
Funny, a little different than a lemonade stand, probably because I'm from Florida, but
that would make sense. Awesome. So, I mean, and you know, not only commercial real estate, you really niche down. Which everybody, you know, if you're thinking of getting into commercial on the commercial side of real estate, being a niche expert is so key, because each asset class has its own quirks, and you got to learn to love those quirks. You can only do that by loving the asset class itself. So you niche down. You chose triple net lease, which is something unique. You know, I don't have any background in triple net lease, so you're going to be my instructor on this one. So why don't you tell me and everybody listening, what is triple net lease and why is it so so sexy?
Yeah, definitely. So triple net lease, you know, it's funny when a lot of times when we talk about real estate investing, sometimes you think of maybe single family rentals or multifamily apartments. And when you talk about commercial retail, you know, when you're driving to the grocery store, when you go through the drive-through at Taco Bell, when you go to CVS to pick something up, what you don't realize is that there are owners and landlords of those properties as well. And those are investment properties, just like a single family rental. It's just structured a little differently. So a single tenant net lease is basically exactly what it sounds like. It's a freestanding building. And as an investor, you're buying the real estate. You inherit an existing lease that's in place. And that lease is typically for a number of years. So it's really a cash flow stream that you're purchasing. And a lot of times they can act like bonds, whereas opposed to a single family rental, the tenant is responsible for taking care of everything. Obviously, it comes down to lease language, but oftentimes they pay for real estate taxes, they pay for insurance, they take care of the building.
Wow, real estate taxes. I actually did not know that. That's really interesting.
Yeah, so it's a vehicle that a lot of investors use to be very passive. A lot of times because of the barriers to entry in terms of typically the price point's higher, typically the complexity's there, so you have to understand it to be comfortable with it. So a lot of times the investors in that space have spent years and years investing in other areas and have just found a way to migrate there. Or you might find, you know, people who have very demanding jobs, CEOs, doctors, might find this as a vehicle because it's passive. They don't have to do much, but they can place a lot more capital than you could place in, you know, a portfolio of rental properties that are single family homes. So the misconception is that they are that easy, which they can be. But there are a number of factors and just a lot of complexity to take into account when weighing risk, because you may get into one of these, set it and forget it, like I said, for say 7 years. Next thing you know, something happens, your tenant's gone, and your cash flow stream goes from what it was to zero. And now you have to figure that out. So a lot of what I do is help advise people through their hold period on how to really maximize value and avoid those risks that a lot of times it's easy to just forget about, because every month you're getting direct deposit rent into your account and you don't hear from the tenant until there's an issue.
which is never good. I mean, and when I hear that, where my mind goes, you know, when I first got started out, I was renting out single family houses, which, you know, a lot of people do. And in that situation, you got one person, you're always checking in on them. I'm not always checking on them, but, you know, you check in on them, you know, regularly. It sounds like, let's give an example here. A CVS. So, you know, a big structure, one tenant, CVS is the tenant. You don't really hear from them that often in this situation. They're just kind of renting the property from you. Can you kind of take us through, you know, one example of a deal from, you know, finding it to purchasing it to the hold period where you're actually managing it? How does it differ from something like, I'm going to use the example of single family, even though there's, you know, it's not even commercial, but compare it to single family so people can kind of see that the differences there.
Yeah, absolutely. You know, there's definitely pros and cons. Because of the passive nature of it, your return that you're going to get on something like this is probably a lot thinner than what you might be able to see in other vehicles like single family rentals. But you're buying a long-term cash flow stream. So, it's all risk versus return. The shorter the lease, the higher your risk, because your cash flow stream that you're buying is lower. Mm-hmm. So a buyer is going to demand, and an investor should demand, a higher return for a shorter term lease, because you need to take on that risk. It's risk versus return, right? But most people that want these to remain passive, that's why they'll look for long-term leases. So 10, 15, 20-year base lease terms where that tenant has committed to, over a decade of cash flow. And typically there are rental increases built in there. So you can plan your cash flow accordingly and really understand what your return is going to be for a very long period of time. The big, risk factors you take into account are that lease term remaining, but also who's backing that lease. Obviously, if it's CVS, credit grade, corporate tenant, that's one thing. But sometimes you get into maybe a restaurant franchisee. Maybe it's a nail salon, a Taco Bell that that operator only has 8 units, and so you have to weigh that risk accordingly. But compared to single family rentals, where you'll typically either be month to month or a year lease at a time, you're able to buy a cash flow stream that is way far out. And although you don't have the advantage of increasing rents, you're pretty much stuck on that schedule, but it's consistent and you can rely on it. And that's why people buy it, because it's passive for a number of years.
Yep. So this, it sounds like it really does come down to the lease. When you're looking at, I'm in mobile home parks and self-storage. That's my niche. And there needs to be a lease there, but I don't really care that much about the lease because, in self-storage, the next month I can switch the lease over. It's not that important, but it sounds like for triple net lease, the lease is paramount. It is one of the biggest things that you're going to be, analyzing when you actually go in to decide whether you're going to be buying this property.
It really is. And that also kind of works against an investor as well, because although the lease is very important and really the value is in that cash flow stream that the lease provides, sometimes an investor might look only at the lease and not realize that they should also look at just core real estate factors. Because if something happens to that lease or that tenant, you're going to need to backfill the property. You're going to need to have demand for that property to be able to keep it sustainable. So there's, over 40 different factors I'd say we look at in terms of core real estate, whether that's population migration, ingress, egress, visibility and traffic counts, that we use to mitigate that potential risk of them leaving in the future. But when you're going in, you're looking for that cash flow. So you're really looking at that lease and making sure as an owner, what responsibilities do I have? Because the ideal scenario is a triple net lease. But because of the language, sometimes you're responsible for roof and structure. Sometimes you're responsible for parking lot. And while there are those true triple net options, it's important to read the lease language to make sure you know what you're on the hook for.
So take us through the different versions or variations that you would see in a lease. What is a true triple net lease and what does it cover versus, something that isn't as comprehensive?
Yeah. So an absolute triple net lease will remove any responsibility of the landlord. The tenant is going to pay real estate taxes. Oftentimes they'll pay them directly. So they'll actually be billed the real estate bill and they'll pay them directly. Wow, that's crazy. Other times they reimburse. So as a landlord, you'll get the bill, let them know and they reimburse you. Insurance. And oftentimes they'll just name the landlord as additionally insured. So they pay that directly and contract it out. A lot of times, especially the larger outfits, they have umbrella policies. So it's to their benefit to actually control that policy and just name you as additionally insured. And then maintenance. And that's the biggest one that can vary depending on the language. But for the most part, you'll typically see the tenant responsible for the building maintenance and upkeep of the grounds. Some of the things that you often see can flip-flop between landlord and tenant are roof and structure, parking lot. Sometimes it's HVAC. In scenarios that even get a little more hairy, it's plumbing or electrical. Right. And so, sometimes certain leases are referred to as double net leases if they don't cover the main three nets. A triple net stands, it's net of real estate taxes, net of insurance, and net of the maintenance. That's essentially where that comes from.
Got you.
Roof and structure is not always necessarily a critical bad thing. I mean, structure oftentimes is fine unless you want to make sure you understand what market you're in. If there are risks to the structure, then you're going to have to rectify it if it becomes an issue. But roof is really what you're looking at. If you're responsible for roof, how old is the roof? You do a physical inspection when you're purchasing, and you can understand what condition it's in and underwrite for some reserves over time to be able to take care of that. It still remains pretty passive. So there's a lot of triple net lease owners that will buy double net lease deals. And sometimes you can get a slightly higher yield because you have that additional responsibility. And so depending on what they're comfortable with, that can be folded into their portfolio.
So what are, it sounds like it's just very, very hands-off if you get a true triple net lease deal. I'm sure that is reflected in the cap rate. What cap rates do you see when you're actually purchasing, $1 million, $2 million, smaller size triple net lease?
Yeah, definitely. It's risk and return. So if you're buying short-term lease, you'll get a higher cap rate. If you're buying a smaller guarantee, you'll get a higher cap rate. But if we just want to try to keep apples to apples, and let's assume, say, a 15-year base term lease, the biggest factor that's going to change your cap rate now is either like a corporate strong guarantee or a lower franchisee guarantee. And, if we take both sides of the spectrum, if you take a McDonald's ground lease, corporate McDonald's guarantee, sometimes those are trading at between 3% and 4% cap rates, especially in this market, which is super aggressive. But alternatively, you can buy into, say, a growing franchisee, like a Sonic Drive-In. I work with a Sonic Drive-In operator, and he's in growth mode. He now has 10 locations and, a personal guarantee on the lease and a fair amount of net worth. So it's a decent guarantee, but it's not the safety and security of corporate McDonald's. So, but if you're willing to take that risk in terms of that guarantee and you understand their growth trajectory and you're comfortable with it, you can get some of those deals between 6% and 7% cap rates. And if you have some solid rental increases, that can really help you to boost that, because some of these deals have 2% annual increases. And that helps you get an average cap rate over time or average return over time that's, pretty attractive.
Yeah, no, that's not, that's the same thing we're seeing in self-storage is 6 and 7. So it doesn't sound like it's that, that much different. Obviously, if you get the cream of the crop, cap rate's going to go right down, especially if you're downtown Los Angeles, something like that. But
well, in those types of markets, or say the 20-year ground lease by McDonald's, those types of deals are really wealth preservation. The buyers for that are all cash. They might be in a 1031 exchange, and so they're deferring taxes and they're saving on that. And it's less about the return and more about, legacy planning for their family. They'd rather have the stability and not even think about it than to worry about what the actual return is that they're pulling in.
Yep, that makes sense. So, one of the big factors here is the lease being due. So say you buy a triple net lease that, the lease is going to come up in 1 year. What is the average? What can a person expect in terms of releasing that property? How often do people just renew their lease? How often, if they don't renew it, how long does it take to release a property that is, very specific to a certain type of industry?
Yeah, that's where those other 40 factors come into play, because if you have solid traffic counts, if you're in a really dense market, a lot of disposable income, you might lease that thing up before your tenant's even gone. Your tenant gives you, say, 180-day notice, and they allow you to start marketing it. You might have it leased. And alternatively, if you're in a more tertiary market, maybe the rents that you're collecting are higher than what the market can sustain. It might take you a long time to rent that out. And I've run into clients that have been stuck with a vacant net lease property for 6 months or a year, trying to get their cash flow back to where it was. a lot of times there's an expense to getting that back up and stabilized too. I mean, you're going to pay probably a leasing commission. You're going to pay TI or tenant improvements to any tenant that's coming in. And you're probably going to give some sort of rent concession while they get, their work done and they get ready to open up. So for, investors that want to keep it truly passive, I always recommend that, and this is kind of a secret that I'm going to let you in on. A lot of these leases have options at the end of their base term. So for instance, if you have a 15-year base term, that tenant might also have five-year options, meaning at the end of that base term, they could exercise an option to extend for 5 years and then another option to extend at the end of that 5 years. But those options really only benefit the tenant because although it's their option to stay, it's also really their option to leave. And because lease term really impacts your cap rate, when you sell, you want to sell with the lowest cap rate or the most lease term, right, to maximize value. So if you wait that thing out until the end of the base term, and now you're only ever going to be able to sell a 5-year lease for the next 20 years or however many options they have. So for my strategy for clients that truly want to keep it passive and mitigate the risk of having to deal with a vacant building is you better buy a 15 or 20-year lease and plan to sell it, with 7 to 10 plus years left. And so a 7 to 10-year hold on these types of assets is strategic. It's not ideal for someone that totally wants to forget about their investment, but compared to other vehicles, I mean, it's about as passive as you can get and still mitigating that risk of, a vacant building.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast. Yep, I love it. All right, man, we've blown through our time, so I got to push us into the quick question round. You ready?
All right.
Always starts with books. I'm a big bookie, so give me 2 book recommendations, one for general life wisdom and then one for real estate.
Got it. Well, aside from the book I wrote that I'm releasing later this year.
Plug that bitch. Let's hear it.
Yeah, it's the Net Lease Investor's Handbook. I've read a ton of books trying to find something on net lease deals or commercial real estate, and there's very little out there that I think holds value. So I really tried to make it informational and less of a big business card and more of some actual content. So if you connect with me, you'll be able to have access to that later this year. But I would also say out of all the books I've read on commercial real estate, very few have added a lot of value, but there's one called the Due Diligence Handbook for Commercial Real Estate. It's by Brian Hennessy. And I mean, that's probably the most comprehensive beginner's book on what commercial real estate looks like from an investment standpoint. I definitely recommend reading that if you just are trying to learn what commercial real estate looks like. And then from a non-real estate book standpoint, I would say A New Earth by Eckhart Tolle. I love what I do, but it took a lot of self-reflection to understand what drives me and my emotions, how to manage them, and how to define happiness for myself. And that book kind of set a foundation for me to explore that even further and just open my mind. So that's probably my favorite non-real estate book.
Nice. I love it. No, Eckhart Tolle has Tolle. I don't know. That author has very good content. So I love that. And then Due Diligence Handbook. I haven't read it. I've heard about it. I'm definitely going to pick it up. You're not the first person to say that. So thank you for reminding me. Moving on though. So you have quite a experience behind you. You obviously were not always in real estate. Go back to the James who had no idea what he was doing with his future. He didn't know about real estate. Go to him, look him in the eye, give him one piece of advice moving forward.
I would say my one piece of advice is to just remember that imperfect action beats perfect inaction every time.
Yeah.
So you got to get up and get moving. I mean, analysis by paralysis is real. If you're not sure what's going to work, it doesn't matter, because as an entrepreneur, it's inevitable you're going to fail. You got to just fail fast until you figure out what works, and then do that consistently. So I would say just go out there and do it, and be okay with failing, because if you stay consistent, you stay persistent, and you just keep pushing ahead, eventually it's going to stick.
Yep. No, that is great advice. I think it was General MacArthur who has a really good quote, that kind of instills that sentiment, but I've always loved it because it is so true, especially in real estate. You just got to do it.
Right.
So many people reach out and they're like, what do I do? Just take the first step and then take the next one. It really, you're not going to know everything when you start. You just got to get that action, get that momentum going. And eventually things will start to pile up behind you. And it's the beauty of life. So moving on, next question is about habits. Habits are the foundation of our life. So if you could point to one thing that you do day in, day out, that you feel contributes the most to your overall health, well-being, and success, what would that be?
I would say my morning routine. Having a routine that gets you in the mindset to just go and be efficient. I mean, between that and I'm like a calendar ninja. I live by what's on my calendar because it keeps me efficient. And part of that is my morning routine. If I don't do my morning routine, I'm out of whack. It can be different for everyone, so you have to figure out what works for you. But, I wake up early, I work out, I meditate, I journal, I read a little bit on some news, I plan my day, and then it's off to the races.
Cool, man. I love it. I've tried to get a similar routine. The only thing that really stuck is working out and meditating. I try to read every morning. I just don't get it. But I got two parts of the coin, and I'm not going to complain there.
I have to tell you, I'm not perfect. Every day is a little different, but those are the things I try to get done. And every time I do all of them, man, it's a great day. So
awesome. All right. So second to last question. The United States is a very large place, plenty of square miles out there to invest in. What is the place that you are most excited about today?
Yeah, today, especially with everything going on, and I'm a little biased because I live in Florida, but Florida has just seen a ton of capital migration recently, ton of opportunity. I'd say Florida and Texas. There's a lot of kind of markets under the radar that I think have some growth potential that, they're both income tax-free states. I mean, those are probably my two favorite right now.
Cool. I love it. And I'm sure that sentiment is reflected in many other investors out there. We were actually just in Texas last week looking at a self-storage. I'd never been in Dallas. That is the biggest city I have ever been in from now. It's just it's huge. It's sprawling. I was so amazed. Awesome. That takes us to our last question. And this one's for the listeners. You've given us a lot of good advice for triple net leases. I'm sure people want to reach out and say hi. So what is the best way for them to do that?
Absolutely. So our website to find deal flow is mgscommercial.com. But you can find me on Instagram at James T. Garner. I try to post a lot of informational content and motivational content to keep everyone that's hustling out there moving. Or you can connect to me on all platforms on Linktree. My Linktree is linktr.ee/James T. Garner. So Linktree/James T. Garner, and the dots right before the two E's.
Heck yeah, man. I feel like Linktree is the best kept technology secret that people just got to get on with. If you guys haven't, I'm just going to plug Linktree right now. If you guys haven't checked it out, it's basically like a little URL where you can put all your different stuff. I got a Linktree myself. So check it out. It really consolidates all those, all the links that you have associated with your life. It helps consolidate it down. So I will put James's Linktree in the show notes. So if you click a little more in the description, it'll pop down the full description. In there, you can find James's Linktree. You can click through, say hi to James, and maybe pick up a Linktree account yourself. So awesome. James, thank you very much for hopping on the show today. It's been a pleasure.
Gabe, it was awesome. Thanks for having me.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason that we do this, so we appreciate having you here. If you guys have any questions whatsoever, reach out to me, Gabe, at therealestateinvestingclub.com, or go to my link tree. I got it there too. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode as much as I enjoyed putting it on, and we're able to pull some actionable advice that you can apply in your own investing today in the field. Before you go, we have a gift for you. If you're a new investor looking to get started or an established investor looking to take your investing to the next level, I've created an ebook just for you, available on our website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find deals that are actually deals, how to finance a deal with little to no money down, and how to exit those deals for maximum value. And if you get the ebook today, I am throwing in a bundle of bonuses, 7 of them to be exact. The first one will be the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating wealth in real estate. The second bonus is the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools, systems, and even the vendors we use to see the success that we do. And the third bonus is the top 100 best performing keywords pack, which will give you the exact keywords we use to target motivated sellers online using PPC ads. The fourth bonus is our contracts bundle for wholesaling and renting real estate, which will give you access to all the contracts we use in the field to execute all different types of transactions. After that is the Investors Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. This is a lot of bonuses that I said. I'm just going to keep going down the list. Number 6 is the Investors Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And the last bonus is the Wholesalers Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. Whew, that is a bundle. So it's a mouthful. You get all of those bonuses for free when you download the ebook. All we charge is the admin cost to run the show. So if you're interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page to take advantage of that deal. And with that said, I hope you have a fantastic day, an even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.